Did you know that selling your mutual funds to meet your urgent short-term needs can cost you 1 crore loss? Shocking, right? Today I will tell you how you can smartly use your mutual funds to meet your needs and continue your investments to grow by using loan against mutual funds. So let's break it down and understand what is loan against mutual funds, how it works, and why you should consider Volt. Meet Rakesh. He urgently needs money for the surgery of his loved ones in the next 2 to 3 days. What are his options? Take a personal loan and pay hefty interest rates, or redeem his mutual fund investments. If he redeem now, he will cover his expenses but loses growth potential of his mutual funds that are worth 2 lakh rupees today, but the same amount can grow to 1 crore rupees in the next 30 years at 14% CAGR, and he may have to pay long-term or short-term capital gain taxes depending on the holding period. So what can he do instead of selling? Well, he can take a loan against mutual funds. Think of it as a gold loan where you pledge your gold and take a loan against it, and here you pledge your mutual funds as collateral. This way Rakesh's investment stays in the market and continues to grow. Plus he fulfills his short-term needs with a lower interest rates. Smart, right? Overall, there are huge benefits of loan against mutual funds, as it is a collateralized loan, hence the interest rates are lower. Also, it is an overdraft facility. That means you can withdraw the amount whenever needed, and you have to pay interest only on the amount that you have used, not on the approved limit. Suppose you take an overdraft limit of 5 lakh rupees but you use only 90,000 rupees for 25 days. That means you only have to pay interest on those 90,000 rupees for 25 days. Also, instead of paying principal plus interest every month, you only need to pay the interest portion. For instance, if you take a loan of 1 lakh rupees at an interest rate of 10.49% for 1 year, your EMI would be just 862 rupees per month. You can repay the principal amount on your terms. Let's say after 2 months you decide to repay 40,000 rupees. Now your outstanding principal will be 60,000 rupees, correct? And your next interest only EMI will be calculated on the reduced balance of 60,000 rupees. Now that we know the basics, let's understand few more things. How much loan you can get? You can get 50% of equity funds current market value and 80% of debt funds current market value. How can you unpledge your units? If your outstanding balance is 0, you can unpledge your units, and after some time they will be available to you again. What happens if you don't pay your EMIs on time? If the interest payment is not deducted due to insufficient amount in your savings account, you are given sufficient time to repay it. Meanwhile, penal charges will still be incurred until the last day of the grace period post the interest due date. If repayments are not made post 7 days, lender will sell the pledged mutual fund units to recover the amount. If the value of the pledged fund drops, limit is reduced proportionally. You can either pledge more mutual fund units or pay the difference to maintain the original limit. One of the best options to take a loan against mutual funds is Volt Money, where you can check your limit within 15 seconds. You just have to enter your mobile number and PAN, verify your email, fetch mutual funds, and that's it. And you know what's the best part? You don't need any documents, because Volt has integrated their systems with registrars like CAMS and Kavi. That means all the information you need to get a loan against mutual funds is in the palm of your hand. Even if you don't want to open a credit line, you can check your loan against mutual fund limit for free, as this does not impact your CIBIL score. This is a great way to know your emergency fund corpus, which you can use without liquidating your mutual funds. Here is the customer journey video where you can understand in more detail. For further details, check out the link in the description. We hope that you have enjoyed the video. Don't forget to like and subscribe to our YouTube channel. See you in the next video. Thank you.